Welcome to this conversation on Business Redefined, your weekly, most comprehensive look at the world of business, finance, and economics. We want to talk about matters insurance. This sector attracts a lot of interest, so much debate in this country. Why is our insurance penetration so low? We have many players. Tonight, we want to delve into a conversation with First Assurance and the Managing Director, Stephen Lokonyo. Karibu sana.
Thank you very much, Julians.
Asante for your time.
Yes, yeah, and thank you for having me here.
Wonderful, sir.
Yes.
For those of us who might not be familiar with First Assurance, tell us who you are and what you do.
First, Julians, thank you very much. My name is Stephen Lokonyo. I'm the MD at First Assurance. And speaking about First Assurance, we are a mid-tier company, very specialized in the medium segment, and we do short-term insurance. So, Julians, we have two types of insurance contracts. We have long-term and short-term. So long-term is life insurance. First Assurance specializes in general insurance, which is short-term insurance.
Yes. Yeah. Wonderful. And what are some of the products you have in the market, and how do you address the market needs?
Yeah, so we have a wide range of products because we've segmented our markets in terms of the retail, which is really individual insurance. We have the commercial segments and the SME as well. So we have got products that speak to all these segments across the range. So our products range from the very individual, which would include insurances like your motor vehicle insurance, your home insurance, or personal accident. Then we have got commercial insurance. Now, these are insurance products that are targeted at complex risks, large corporates, and they will run across the range in terms of protection for assets, employees, and health insurance as well.
I see. Yes. But Lokonyo, why is it that this country seems to grapple with low penetration of insurance? We normally talk about 3%.
Yeah. So indeed, it's a tragic situation because the average global penetration is in the regions of 7%, but there are some countries that actually have penetration as high as 15%. But really, I think the biggest issue for us as a market is financial literacy. So you will find that as a Kenyan community, we rely a lot on social insurance. And social insurance really speaks about how communities help each other whenever they have problems or when calamities strike. So what has lacked for us is really formal financial literacy and how risks can be transferred to insurance companies. So when you see those countries that have got a deeper penetration of insurance, there is better understanding about insurance, the role of insurance in risk management, and how to transfer those risks to insurance companies. And I think for the better part, the low financial literacy has got everything to do with possibly our own education system. Insurance only starts to feature in schools or colleges at later levels. So while banking is spoken about very early in the school curriculum, insurance doesn't feature. And most of the time, people only get to hear about insurance when they have assets that are, exposed. Like when you buy a car, that is when you realize that you need insurance. Or at college level, you will find that insurance doesn't feature so much in the curriculum as much as banking when you speak about the financial sector. So it's financial literacy which is the biggest issue. And I think we have also not done ourselves a lot of favor as the insurance industry. We've conducted our business in some cases in a manner that has not built confidence with the market. When claims occur, we have in the past relied on fine print, and most claims then do not get paid. So the public has a negative perception about insurance generally. So that has hampered that acceptability and the take-up of insurance. Now when you couple that up with low financial literacy, then that explains why insurance has not really penetrated the market that much. Then again, insurance in itself is a complex it is a complex risk transfer mechanism. So as insurance companies, we need to break it down into a more understandable, in a more understandable way, so that the public understands how risk transfer happens and how to transact insurance.
Okay.
Yeah.
Speaking about the scalability of insurance within this market, speak to us about Fast Afya Biashara.
So the Fast Afya Biashara is one of our newest products in the market. Health insurance, for the better part, has been structured as in a scheme basis. It's a product that has been structured for large corporates. And this is also informed by the fact that it's easier to insure larger groups than smaller groups. So what then happens is that insurance for SMEs and individuals, or retail for that matter, hasn't been given enough attention. It's generally expensive. It's generally poorly structured and does not really respond to the unique needs of these markets. So when we looked at the SME sector as a separate sector, we realized that there is a lot of potential there. And frankly, over 90% of registered businesses in Kenya are SMEs. Yeah. So there is huge potential there. So the Fast Afya Biashara is specifically tailored to the unique requirements of the SME sector. First, in terms of the groups that, the group itself, the size of the group. Corporate insurance requires large groups. Yeah. But for the Fast Afya Biashara, we have reduced that requirement so that from a number as low as 3 principal members, you can actually take out a Fast Afya Biashara product. Then we also looked at those things that bother SMEs the most. Cash flow is a big issue. Big issue. Yeah, it's a big issue. So the way we've structured this product is that it's flexible enough to allow an SME to only take those types of cover, of covers that they truly want. And I'll give you an example. If you have, if you don't require, let's say, optical cover, you don't require a dental or maternity cover, you can just take inpatient cover and outpatient cover that you truly require. So the Fast Afya Biashara cuts out what you do not require so that you simply tailor it to really your specific requirements. Then we have partnered with banks to provide insurance premium finance. This addresses the cash flow challenges of SMEs. So you can actually pay your premium upfront using IPF, but then you service the insurance premium finance with the bank slowly over a longer period of time. So affordability, the flexibility of the product, access to we have a large panel of service providers. So this SME product, the Fast Afya Biashara, gives you access to all that panel. There is no restriction on the panel. And I think the most beautiful thing also is where employees require to be given specialized treatment out of the country, they can actually fly out of the country and get that specialized treatment. And then in recognition of some of the challenges at the workplace at the moment, mental health, substance abuse have become big issues. This product has removed those exclusions. And for those young, the young who are still yet to have their families, if they have problems starting up their families, this cover actually goes, it actually caters for fertility treatment. We also even cater for IVF, and so it's a wide cover. It's very responsive, and it actually takes care of the emerging trends in the workplace. Okay. Yeah.
Speaking about emerging trends, one of the challenges that insurance will tell you if they are pushing their products to the retail segment, like Fast Afya Biashara does, is what that could mean for their loss ratios.
Yes.
Yeah. Because of course of the risk you just talked about. How do you safeguard your loss ratio given this kind of product?
So what we do is that whenever we take on a client, big or small, we continuously monitor the performance of these schemes, because we realize that as employers, when claims go over the roof, then it means that in the following year, your premium will actually be, you'll have a loading on your premium. You'll possibly have to have a co-pay where you pay part of the cost of healthcare before the insurance company sorts out the rest. So we have continuous engagement so that we use your data to improve the overall performance. We guide you on the facilities to use. We guide you on, cost-effective measures, and most of all, we also guide you on, preventative measures that can be taken to ensure that those, the illnesses do not metamorphose into something that would be costly to treat. So we have partnerships with some of our service providers who actually come to your office. They can speak to your staff about healthy living. They can speak to your staff about matters related to mental health. And we provide a lot of support. So that way, then we are able to manage the loss ratios and ultimately the cost at the present moment and also in the future.
You've had a campaign called First Things First.
Yes.
What was it about?
So the First Things First campaign was really about First Assurance taking the brand to the market. Prior to COVID and after and during the COVID season itself, many companies did cut down on publicity, brand building activities, marketing activities. And of course, during that time, we also realized that there's been a big shift in terms of customer preferences, and things now happen more, online, digital-based, and we have realized that over a period of time, that brand awareness seemed to have gone down a bit. So for us, the First Things First campaign was really about bringing back the message of First Assurance as a brand, but also just to reconnect with our customers and help them to prioritize those things that mean the most to them. And the rallying call behind the First Things First campaign is that really risk management should not be a complex issue. As a family, as an individual, or as a business, you must choose those things that you want to focus on. And really, it's to focus on running your business or living a healthy life. So what are those things that then you would rather someone else handles? Risks that you are exposed to on a daily basis are some of those things that can be transferred to someone else. So as First Assurance, we come in to take the worry out of your day-to-day activities and the things that you experience on a continuous basis while running your business. So we are taking away that concern about risks, and then you can now focus on what means the most to you. Yeah. So that's really more about the First Things First campaign.
The insurance industry locally and globally is currently going through the transition from IFRS 4 to IFRS 17. And just for the sake of clarity, this is with regard to reporting standards.
Yes.
I'm very curious as to your thoughts in terms of what the transition to IFRS 17 means and what it means for you as a business.
Yeah. So the transition to IFRS 17 really is about standardization of reporting, but most importantly, it's also about transparency, particularly to shareholders and other interested parties. IFRS 17 requires recognition of either revenue or risks when you actually take them up. So that way, IFRS 17 gives the true position about the performance of an insurance company from the outset. So interested parties, shareholders, the public get to know about the true position of an insurance company from the outset. So IFRS 17 has brought greater transparency compared to the old standard. And then speaking about IFRS 17, the impact on short-term insurance has not been significant, except that it is data hungry and also requires a lot of investments in terms of resources, skills, and cleanup of data, because the old sets of data that we had were not suitable for IFRS 17. But insurance companies have had to do a lot over a very short period of time to prepare themselves well. And I must say that we have made that transition successfully. First Assurance, and being part of the APSA group, we were actually early adopters of this standard because we believed that we owed our stakeholders, our shareholders, the transparency that is brought about by IFRS 17.
Okay, wonderful. And still on the industry perspective,
yes,
microinsurance. Many have said that that will be the silver bullet to help this country address the challenge of low insurance penetration.
Yes.
What are your thoughts?
Yeah, Julians, we spoke about the penetration. It's at 3%. That tells you that insurance uptake is possibly maybe at an elitist level. Maybe people who are educated, corporates are the ones who are taking insurance mostly. But microinsurance really speaks to the lower segments of the market. And those are the segments which have had the biggest challenges in terms of, first, that financial literacy we talked about, and affordability of insurance. The way we've packaged insurance in the past was not really very friendly to small enterprises or individuals who have low purchasing power. So you're very right. For us really to deepen penetration, for us to get financial inclusivity in our market, we have to go microinsurance. However, macroinsurance also does require its own fair share of investment. And obviously, shareholders are careful about how they deploy capital, and it may then require some policy interventions just to make it easier for insurance companies to actually tap into that segment. Obviously, there will also be a need for a lot of public education on the relevance and the importance of insurance. That then makes it easier for us to tap into that market. But it is truly the next frontier. Any insurance company worth its salt must look at microinsurance as the next frontier.
Well, Lokonyo, there are so many stakeholders in the insurance sector I've spoken to, and their view is that Kenya's insurance industry is ripe for consolidation.
Yes.
Consolidation because the margins are small, we are many, we are fragmented.
Yes.
Do you share that view?
Absolutely. You see, Julian's size matters. And indeed, for any enterprise to be able to invest, it has got to have the scale and the financial strength to do that. So as we speak now, we have got upwards of 40 general insurance companies, and when you add the long-term insurers, we're talking of 50 insurance companies or so. This is a large number, and quite frankly, consolidation, in my view, is something that it's just a matter of time. It's not an if, it's just possibly a when. And I believe that with the consolidation of insurance companies, we will then have the scale that we will require to invest in product development. We'll have the scale to invest in the systems that we require to run our businesses. We'll have the scale also to invest in people and development of the skills in the market. What we have struggled with for long as a market is low investment in those things that truly differentiate insurance as a service.
Okay.
Yeah.
As we wrap up our conversation, sir, what are some of the initiatives you're taking to improve your customer experience?
Yeah. So some of the initiatives that we've taken, Julians, is just to simplify our contracts. For the better part, and I did mention that the insurance industry has suffered negative perception from the public. This is also because we've had complexities in terms of our contracts, how we interpret them, and when claims occur, customers are left wondering what they're supposed to do to get paid. So what we've done is to simplify our contracts, we've simplified our processes, and we've also cut out the fine print so that at the outset when you're taking insurance with us, you are clear about what you are covered for, and you have a simple process to follow when you have a claim. Then we've also invested in our infrastructure. We've also invested in IT resources. And you'll realize that the current reality is that customers want convenience. People want to transact insurance from the comfort of their homes or the comfort of their offices. So we've revamped our website. We've worked on a portal so that you can actually review our products, seek quotations, and then we can have that engagement in terms of that easy selling process. But then some of our products also require intensive engagement with customers during the life of their policies, particularly health insurance. So we've invested in a call center that is open 24/7. Customers are actually able to reach us at any time, whether with inquiries about their cover, service providers, hospitals that they need to visit, or even small things like even authorization when you go to a hospital to get admitted. So we've invested a lot in terms of our IT infrastructure, and that is just a start, because we have upcoming products like the client portals, broker portals, and that then will help customers or our intermediaries to easily interact with us and gain access to our products, get pricing easily, and get support all through the currency of their policies.
Okay.
Yeah.
My second last question is this. Bank assurance.
Yes.
Do you think it has significantly moved the needle of insurance in this market?
Indeed, it has, because we do acknowledge that the banking sector has done a lot of work in terms of building credibility. So what the entry of bank assurance in insurance has helped us to harness or to benefit from that credibility that banks have built over a long time. But the other important point is that banks have a huge client base, and these clients sample banking products on a daily basis. So this has actually increased the reach in terms of the customers and access to products, insurance products through the banks. First Assurance is part of the ABSA group. So as part of this banking group, we definitely have gained a lot, particularly in terms of distribution of our products through the bank. But we also do distribute our products through all other banks, and most of them actually do run bank assurance intermediaries. As you've seen from the results that were, the bank assurance intermediaries published last year, they are doing extremely well, and sales through the banks have actually been growing. Through that growth, we've also gained immensely. And I think the insurance industry's growth over the last 3 years have been upwards of 10% on a consistent basis. Yeah. So banks have contributed a lot, and there is still even more that the bank assurance intermediaries can do to help with that penetration.
I see.
Yes.
Well, Lokonyo, I've kept you longer than I should have. My final question to you is this. Yes. Give us your parting shot to the audience in terms of what they can expect from First Assurance.
I think my parting shot is, quite frankly, transfer of risks is something that as an individual, as a business, or as an SME for that matter, you cannot take for granted. Allow insurance companies, allow First Assurance to manage your risks so that you can focus on those things that mean the most to you. And that's really our mantra on our First Things First campaign. Focus on the most important things to you, allow First Assurance to manage your risks, and take that worry away from you.
All right.
Yes.
Thank you very much. We have been having a chat with Bwana Stephen Lokonyo, the Managing Director of First Assurance, covering specifically some of the interventions they are putting in place to help ramp up penetration of insurance in this market, the innovations, the products they're putting into the market, and also broadly speaking about industry perspectives from microinsurance to IFRS 17 to bank assurance and what that means for you and I, who are the ordinary citizen. We shall keep on highlighting these issues for your interest, so stay tuned to Business Redefined.